Welcome back everyone. Before we go on further to the charts to discuss how I made $1,600 profit in less than 30 seconds, let's talk about the statistics first. I took 8 trades in total that day, out of which 6 were losses and 2 were winners. And the 6 trades which I took that were in loss were due to me losing my patience and not waiting for market open, as my main statistical edge and technical edge comes after the market open, which I found through my back testing. So as you can see, these were the 8 trades which I've taken. Till here was my losing streak of 6 trades, which as you can see was before the market opened at 4:30 Moscow Standard Time. And the trade which made me win, made me pass the second phase of the evaluation was this one right here, which I executed at 4:36:40 seconds and ended at 4:37:9 seconds, basically a 29-second trade. The rest of these 3 positions were like, I was just supposed to place them in order for me to pass my minimum trading days target. And as for the equity curve, as you can see, the first 6 trades were in losses, and after that it just pushed up. Now if we talk about the gross profit, was $1,651, gross loss was $639, maximum drawdown was around 3.2%, and just one trade made me pass the second round in 30 seconds. The average profitable trade according to statistics was $25, and average loss was $71, which is really good. Largest profitable trade was $1,605, and largest loss was $126. Profit factor of 2.52. Expected payoff is 91, but it is very skewed. Don't follow that. Don't focus on this one. Now let's talk about the charts. Before I move on to trading view to show you the exact 1 minute setup I was looking at, let me show you the MT4 chart with the overall market data and reasoning behind it. Okay, so now let's look at the Friday's data. In this region over here, this was the fake out which happened almost mid-session on Friday, a fake out. And when this pin bar was formed, this candle, the black candle over here, this was basically an area which I was looking at. Like you can see the resistance here, so it just came back up. At one point it was bullish, and then it just drove back down. So I was thinking thinking this to be a liquidity area. So when the market dropped down on Friday, I was looking for a continuation to the downside, at least from this area. So we'll come back to the Monday's data on 25th of October. As we see in the Asian session, we created a low over here and we consolidated for a while and then pushed up. Now I just trade after the 4:30, that is after the New York market opens. So what we need to see is that this candle right here, this blue candle, market opened. This dump towards the downside was the trade which I took. Why? Because as I said on Friday, this was a huge liquidity area, this whole area, and I wanted to take a trade off of that. So when the market came and rejected this area in the first 5 minutes, I was looking at the 1 minute setup on TradingView and on this broker, because the chart data is a bit different, and as in TradingView my chart doesn't show all this data because I choose not to see it while trading, because it may hinder my responses or the way I react to the trades. And then later on, when this setup which I was looking at 1 minute, I saw a rejection towards this area over here and took us, I think, sell stop or sell limit entry, and yeah, just finish the trade in 2 minutes. I'll take you back there, but before that, let me just discuss the chart a bit for a while. So now the plan for the day was that if the market comes back to this consolidation range, I wanted to take a buy above it if it's able to sustain itself, which it did, but I was already done before that. I was already done before this. So now the market didn't come here, but just, my plan for the day was if it closes below here, I will take a trade towards the downside with my first target with being this TP1, and this second target would be this second take profit. But it didn't, and this consolidation range was heavily respected as the market just pushed up from here. So now the other side was that this area where we had a fake out on Friday, if this area is broken, closed above, and a support is formed there with good momentum, I could see a potential move towards the upside, which we did right here. Consolidated for a few minutes, 5, 10, 15, around 15, 20 minutes, and then broke out. Broke out, $15,500 level reached, and well, but I didn't take this trade because I was already done for the day. So now I'll take you to the trading view chart. Okay, so now we're on trading view. I'll take you back to 25th of October, which was right here. Now as you can see, my key levels are marked up almost on the same basis as my MetaTrader account. So now as you see on Friday, there was this rejection which I was talking about, this rejection right here. And this was a heavily corrected region because once the market came down, rejected here, made a retest, and then moved back down. Let me take another color to show it. So the market made a high that day, came down, retested this zone, which was my resistance and support zone, came down to this low of the day, which was the low of the day on Friday, came and then broke it. So now I know for a fact that this zone was respected, as we have sellers over here, we have sellers over here in this region, and then we have sellers below the low of the day. So now coming back to Monday, the market came back to the same region where I had sellers, where I had suspected sellers over there. So now if we look at the price action and zoom in a bit, this was a 1-to-4 risk to reward ratio trade in which I was risking $400 to make $1,600. Now as you saw, this was the open of the day. Market opened, currently made a low. Now keep in mind, this whole thing has not happened yet. So middle of the day, but there's no support form or there's no consolidation, nothing at all. So for me, this low is not valid yet. So the market pushed up for the first 5 minutes. The first 5 minutes ended over here, and the candle was pretty bullish because it opened here, closed around here, so it was bullish 5 minutes of the market open. But if you look at it closely on the 1 minute time frame, we rejected heavily with the pin bar. The second was also a pin bar. Now the third one is a low confirmation candle for buys because there is low body, there is almost none, or there is, but less failed body, let's call it that. And this low body is formed because of low volume. So now when I took this trade, I had a sell stop entry below this area and a tight stop loss above this weak bullish candle. So and at one point, at least for the first 40 seconds, For the first 40 seconds, this 1 minute candle was bullish and it had no bottom wick. So when it has no bottom wick, I'm not interested to take a sell yet. It looks enticing, but I'll only enter when a bottom wick has been formed, a top wick has been formed, and then it pushes in my direction with momentum. So now, once the top wick was formed and with no bottom wick, I was more sure that okay, if it comes down, it will take me, it will go past the low of the day to reach my targets, which it did, and I got triggered in around the same, around 15,431, I think, or 15,434, I don't remember. And I was looking for 1 to 4 risk to reward ratio, in which the target got hit, and even eventually more than that. If I held this trade, I would have made around, well, let's say till my 1 hour level was 11-hour trade, which is basically $4,400. Yeah, but who cares? That's it, guys. Have a nice day. And if you find this useful, please hit down the like button and subscribe for more content. And if you want to learn about some other things, the way I trade, just comment on the section below and let me know what you want. Okay, take care, guys.